we've done a bunch of reading lately and a lot of new stats out on homeowner equity,
Yeah.
Tego. It's really exciting in a way for all our homeowners.
It
right?
really is. The homeowner equity has exploded nationwide.
Equity is the value of what you have in your house above any loan amount. So if you owe 200 on your house and it's worth 300, you have 100,000 of equity.
Perfect. Right. So that is unrealized gain is another way to put it.
Well, not necessarily unrealized gain, because if you put 100,000 down on your house, you have 100,000 in equity.
Good point.
But
That's
a lot of people
true.
today are having extra equity in their house because their value of their property has increased.
So CoreLogic, which was one of the big mortgage, real estate data set companies that track, all types of stuff related to real estate and mortgages. And so they put out a report every quarter looking at homeowner equity nationwide. And they look at all the properties in the country and then all the properties that have a mortgage. And they say there's about 63% of all the properties in the country have a mortgage.
So 63% that means 37%. I'm doing the math in my head. 37% are free and clear, have
Correct.
no mortgage.
Yeah.
So that's more than every 1 in 3 houses.
Yep. And
have no mortgage. Wow.
That's true. And a couple things that jumped out at me, Tracy, was first off, they project that there was a $2.9 trillion increase in the last 4 quarters. So this is through the end of quarter 2.
Increase over previous, not just total value.
No. This is increase
in
in the last year.
Wow.
That's a lot.
Say that number again.
2.9
trillion.
Trillion.
So that means homeowners in the United States have 2.9 trillion more equity in homes than they had a year ago.
Net worth is another way to say it too, right? That's
Right.
additional net worth in Americans' pockets if they were a homeowner.
Wow.
Or
That's
if they are a home.
significant increase.
It's a significant increase. And of course, that's going to bring up the whole conversation. Oh, here we go. We're building up. Homes are overvalued. And I'm not going to go there right now. But so I kind of just did anyway. But one of the things they look at also is negative equity. And negative equity is basically people that are underwater, right? They owe more on the home than they can sell it for. And to put it in perspective, at the end of 2009, basically when the housing bubble really burst and we really went into the Great Recession or the financial crisis, 26% of all mortgage properties were in negative equity territory versus today it's 2.3% nationwide. And New Mexico, it's only 2%.
Of negative equity.
Yeah.
Interesting.
So it's, we're in a very good position. Another part of that, and I don't have it right in front of me, but I'll go from memory, is I think it was 97% of all mortgages have at least 10% equity.
I think that's what I remember reading.
Yeah.
So.
So anyway, go ahead.
Go ahead.
Well, I was going to say, so that gain in equity, we were talking about that 2.9 trillion. If you put them all together in the whole country, the average homeowner in the U.S. $51,000 in the last year. Yep, in increase in equity, and in New Mexico, since we're here, $37,000 in increased equity in their home. Over their mortgage.
So increased equity in their home is 2 factors that I can think of.
Mm-hmm.
Right, the home value went up,
yep.
But also they're paying down their mortgage, so that what they owe on it has gone down a little bit in the last year.
Yeah.
And what it's worth has gone up.
Yep.
So their equity value has gone up by both of those things.
Yeah. It's an impressive statistic, and I know there's a lot of concern about, home prices are getting overheated. Home prices are overheated. We're pricing people out of home ownership, and it's a real concern. It really is.
It is, and home affordability is a completely different topic that we've talked about. But honestly, with the interest rates where they are, like you said, we're staying in that more affordable range because of the low interest rates to offset the higher prices.
And let me just define that so people understand. We're saying affordability, we're talking about, what their payment is versus, what their income is.
Right.
Right. And historically, it was somewhere around 30%. Right now, we're still about 20%, 21, 22%. So, because of the low interest rates, it's kept the affordability good. And I know there's a lot of concerns out there. It's like, oh no, what happens when we get to 4 or 5%, mortgage rates? Some people think we may never get there again, but that's a whole different conversation.
Yeah.
But it's interesting, and people are going to end up staying in their homes even longer. We went from 5 years as average people stayed in their home to 7 years. Now people are staying in their home 10 years and longer. And if we get mortgage rates that move up, let's say up to 4%, and people are locked in at 3%, we're gonna have a lot of people staying in their homes longer and longer just because they've locked in at the lower rate.